Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. All right, welcome to the end of trade 40. Finally, it is now 2024, so that trade did span over the end of the year. I think you can see from our chart here is the 2024, here's 23 over here, 24 over there. So we were up pretty high in terms of 2023. There was a pullback in the market. I think we watched the entry and the other parts on our year-end summary. But as of the first trading day of the new year, the market gapped way down and closed about here. And Adam decided to go ahead and take an exit. We've got a bit of a profit on this, but we did have a little bit of a pullback. We're going to go ahead and take an exit and watch that trade happen live. You can see the order going in, and it is filled, and trade 40 is over. Let's head over to our updated tracking sheet and see our results so far. All right, we've got things cleaned up here a little bit on our new tracking sheet for 2024. One of the things you can see is we don't have any trades yet except our first one. And what I've tried to do is highlight sort of the important columns and kept them in color coded. So our buy and hold strategy for SPY is going to be blue, and our trading strategy is going to be green. And that'll be reflected in the numbers, the charts, and everywhere else. So what happened on trade 40, the end of 40, or what we're officially calling trade number 1, 2024. Okay, that trade closed on January 2nd, and you can see the price of the S&P 500 SPY 475.31 at the end of the year. On that particular day, 472.65. That brings the trade value down to minus 0.56. And our trade was down from that peak, even though the trade was a positive trade. From the peak of it to where we closed out, we were down 1.09%. So that's actually reflected in our year-to-date down 1.09%. So on our charts, you can see an interesting thing here, which is we're showing some negative numbers. We definitely do not like that, but that is what we have to show. So on our metrics in terms of percent winning trades and profit factors, we don't have any real data to show. We've only got one trade there. I have updated our 3-year chart, which is now going to be a 4-year chart, not 3. And you can see our entries in here. I've included the trading on SPY, just trading SPY. But just to kind of conclude this last trade, minus 0.56% loss on trading on holding SPY, and also minus 1.09 for our trading strategy. I do want to also note that I have updated the S&P holding SPY strategy to include dividends and all things all in. So if you were going to buy and hold that strategy last year, you'd have cleared about almost 27%. So a really outstanding year on holding the S&P 500. But our year to date, we netted 42.28. All right, I do want to show you one more chart, and we're going to transition to that here. All right, why is trading the spiders along with SSO so interesting to me, and why do I show it? Because our comparison has always been holding the S&P 500 in terms of SPY versus trading. And the instrument we're trading is SSO. So here's why. If you take a look at this chart, it assumes you started with $100,000. And if you've been trading for the 3 years and now starting into the 4th year, here's what that $100,000 would have turned into. If you were buying and holding the S&P 500, that 100,000 would have turned into about 125,000. And that's including an 18% drop 1 year. So that's pretty good. If you were trading SSO and you started with $100,000, you'd now be sitting at around $180,000. That's pretty good too. And then if we were trading spiders, even though trading SPY doesn't, do as well year over year, what you can see is the big difference is when the market's falling, and I'm talking about this particular year, when the market was falling in 2022, the holding lost money, trading SSO lost a little less money, but lost some. But trading SPY actually made money about 10%. So in a good year, it is not going to keep up with trading SSO. However, in a bad year, it might. And the reason I'm watching it is if you look at this, this blue line right here, what that is a blend of trading SSO along with trading spiders. And what you can see is, there's not a bad year even when there's a bad year. We're still making money in 2022, although not much. And you can see sort of in the blended way where we ended up after 3 years and now moving into our fourth. But the delta is not that much different. So as you're thinking about your trading, it doesn't have to be all in on one thing. You can combine some things to try and balance your risks and maximize your returns. So I hope that makes sense. I'm curious. Leave me a comment if this is making sense and it's clear that by trading SSO and SPY, I can still see some good returns and outperform the market every single year. And what it does, if I'm trading those in some combination, I can actually lower my risk. I hope you found this helpful. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.